Hi everyone, today's Monday, June 1st, 2020. I'm your host, Isaiah Riel, and this is my Monday market commentary. Before I begin, please continue to do your part. Stay safe, stay healthy. We will get through all of this. And so I just wanted to share some positive messages your way. So to begin our episode today, we're starting a new month, June 1st. In my opinion, it's the best month of the year because my birthday is in June 4th. Anyways, with the start of the month, I want to share with you, where do we stand right now with the stock markets, the economy, everything in between. So today, in the next couple of minutes, I want to share with you three things. Where we stand with asset classes, so those are equities, which are stocks, ETFs, those kind of things, bonds, cash, international investments, commodities. What are the rankings? So I'm going to share that with you. I'll talk about sectors, and then I'm going to talk about where we stand with the indexes, the S&P 500, those types of things overall. So let's begin with this, the big picture aerial view. Where do we stand with asset classes? So right now, I'm going to share with you the top three. Number one right now is cash. Cash has been number one since we had that initial down in the COVID-19. Cash is still number one. Those can be CDs, money markets, those kinds of things. That's number one still. Number two is fixed income. Those are bonds. When we peel the onion on the fixed income, right now it's convertible bonds, it's preferred bonds, high yield bonds, which also can be called junk bonds, and then corporate bonds, which are bonds invested into highly rated companies. Typically it's in S&P 500 companies, those type of companies that have these bonds. So number two is fixed income. Number three is domestic equities. And so those are the investments, the companies here in America. They came out of favor in those initial couple of weeks after the coronavirus happened, the stock market went down. However, since then they've picked back up buy signals, but because they went down so rapidly, so quickly, it takes time for domestic equities to pick up the buy signals. And so they've continued to do so throughout all of this in the last 2 months specifically. But as of right now, where we stand with entering June, number one is cash, number two is fixed income, and number three is domestic equities. So that's the order of the rankings. Now, moving into sectors, so diving a little bit deeper, peeling that onion a little bit more, let's talk about domestic equity. So where do we stand right now with sectors? Well, right now, number one is technology. Number two is energy. That's oil. So think of Chevron, think of those type of guys. Three is healthcare. Number four is consumer cyclicals. And number five is communication services, which is the Facebooks, Amazons, Googles of the world, and AT&Ts and those kind of people. However, just for me personally, this is my own opinion and my thought process. Please, whatever you think, conduct it with your financial professional. Right now, we're focusing in one and two specific areas. Number one is technology. Number two is healthcare. Those are the two areas that I'm focusing on right now for clients because of looking at the entire environment. Well, technology, we've seen the power of it. We've seen the importance of it during this coronavirus, and also too with healthcare too as well. Not even before all the coronavirus started happening. There was a big need for healthcare, but even more so. You think we're going to be even more cognizant of what's happening out there? You better believe so. So those are the top five right now. However, I'm focusing on those top two, technology and healthcare. That's where we stand with sectors. And then lastly, indexes. So big picture, the S&P is still down about 10% from the all-time high. The Dow Jones is down about 13.5% from the all-time high, and the Nasdaq's down about 1.5% for the year. So we're picking back up. It takes time. We're picking back up from where we were. Lastly, because markets went down so quickly and they're picking back up, the last thing I want to share with you is make sure you have a plan now and moving forward for yourself. I know I'm going to continue to repeat myself in these videos, but it's important. If you're conservative, well, okay, focus on the fixed income and that kind of stuff and make sure you feel comfortable with that. If you're in between, make sure you have the right investments investments to help with equities and also to fixed income. If we're aggressive, make sure you have the right plan in place moving forward, because my own opinion is that we're not done with this volatility. We have a lot of room to grow, and then also too, we're forgetting it's an election year. So there's going to be some more volatility ahead. So we have to be prepared for that at all times. So I always want to share with you, make sure you have the proper plan in place based off of your goals and based off of your risk tolerance. So always make sure you have some type of agenda for yourself when it comes to that. So that's my Monday market commentary. If you have any questions, any thoughts, please feel free to message me, comment me. I'm always here for you as a resource. Please continue to stay healthy, continue to stay safe, and I look forward to talking to you again soon. Thanks so much. Take care. Have a great day.